Welcome back. You're watching Startup Central with me, Nayantara, working from home. My next guest is a fintech startup that has managed to raise about $10 million from Sequoia Capital as well as Matrix. This fintech company also does some business with IDFC First. Let's find out more. It's Anurag Sinha, the co-founder at Onecard, a $10 million fundraise. Hi Anurag, congratulations. I think any check during COVID-19 is really big news. It's a welcome move by every startup that is trying to reimagine business models, increase its cash runways. First up, tell us a little bit about Onecard.
It's been a really privilege to see how investors like Sequoia and Matrix are backing up in these times. So Onecard is industry first metal credit card and powered by an app. So as you know, credit cards are already there in the market. But the point is that, especially in the current pandemic world, what we are seeing, consumers are more and more inclined towards managing their entire experiences digitally, and which is what we are trying to solve. Right from applying for a credit card to managing the entire life cycle of the credit card, making payments through contactless, managing rewards in the app, as well as managing repayments and credit. The entire life cycle of consumer is managed through an app. And it's very important for a product like credit card because credit card is a very high-touch product. Compared to any other banking product, actually your journey starts when you get the card because you're going to make some 30, 40 transactions in a month. You're going to make some payments, have some disputes, have some rewards. And that's where an engagement platform like an app makes a lot of sense. So that's what we intend to solve. And just want to add, it's a 16-gram stainless steel metal, which just adds to color to the consumer because that drives more preference towards our product.
When you've also seen a lot of fintech companies gaining from COVID-19, that has happened simply because fintech has become the new normal. People locked up, they don't have a choice, they've got to make payments, they've had to embrace fintech, right? And in the entire ecosystem, when you look at it. How are you a differentiated fintech startup?
Okay, it's a very valid question. So the way we look at things, we believe that if you want to reimagine experience, you have to think full stack. So the first differentiation is that we are a full stack company. So we are not solving just distribution. We solve distribution, underwriting, managing the life cycle throughout the journey. So that's one. Second thing is, we also believe that for a lot of Indians, they are handling credit for the first time. So you need to be taught about managing credit as you give credit for payments. So we also run a panel app called OneScore, which essentially teaches Indians how to manage their credit and maintain in a good health. And that app actually scaled up even larger. We have more than 2 million users there. So these are the two differentiations. The third is, of course, we are all riding on, as you rightly said, the adoption towards digital payments, which got accentuated thanks to pandemic, even before it was happening, but it just got added to that. And so we're the kind of place the product at the right time for young Indians.
Okay. Now I want to ask you a question that, a lot of young entrepreneurs, new startups will want to know from you, Anurag. How did you get the likes of Sequoia Capital and Matrix to invest? How long did it take? I'm sure a lot of these pitches had to happen virtually, and I'm sure, getting checks in these times is even tougher than normal. So what did you do right?
I'll just add, I think the first premise is the opportunity itself, and which is, I think, quite visible, but it was more better articulated by us because what we see, a very large merchant ecosystem being already created by banks as well as more by non-bank fintechs, and very large unsecured base which is yet to be given credit cards. I mean, for a people, there are 200 million people in the bureau having bureau score, but only 30 million of them have credit cards. It's a very large problem to solve. And 6-7 banks control 90% market share. We saw a big opportunity, and the way we demonstrated our execution of building the entire full stack, technology stack certified by Visa over the last 8 to 9 months through the pandemic. I think these are the things which impress. And of course, our relationship with these two funds go long back. Being a second founder helps. Sequoia was my backer in my previous company as well. So the relationship go long. But as you rightly said, these things develop over time. I think the most clinching fact was both between us and investors. We are a very long-term company, and we see Indian credit opportunity to mature, and we would like to play a part in that. And that's what actually attracted our investors to invest, because they see us as a ex-bankers team seeing this opportunity for long term. So I think that was the most clinching part.
Okay. But I've got to ask you also, Anurag, now you're in the business of providing what? A mobile credit card in partnership with IDFC First Bank. What is a mobile credit card? Are all you fintech startups basically betting on the fact that it's going to be the age of fintech, of UPI-based payments, all of that, and therefore the era of MasterCard, Visa, American Express is truly behind us?
Good. So I think from where we start, and as you know, 90% transactions in consumer to business segments are still non-electronic. So they are mostly done through cash and paper-based instruments. So first of all, there is a large opportunity. From where we stand, I think everything will grow. UPI will grow, cards will grow, credit will grow. But as far as we are concerned, card is one of the form factors we support today. And what we are essentially betting on, or rather building for, is that how can we provide consumption credit below the instruments to finance the gap between aspiration and affordability of young Indians. So, and as a company, we are form factor agnostic. However, we believe that from where we stand, all of these elements will grow. As we know, UPI is also trying to bring a credit product in the market, and we are also seeing RuPay has launched a credit card. So, I think as a company, we would like to partner with all of them. Now, coming back on the bank side, I think a similar opportunity is being seen by the banks to solve. But the way we see that, the current set of products which are available by banks, which is either be credit cards or small value credit, they are not mobile friendly, and that's where the real distribution of the consumer engagement is happening. So we want to solve using mobile as the first interface for the users and running the entire cycle behind it. So in a way, just to give you a summary, we are trying to bring the consumer internet thinking to a product like credit cards, which is largely issued through physical means today, and largely the engagement happens through call center. We are trying to solve all of this using a mobile interface, and we could do that because we built mobile first based backend tech stack. So entire stack of underwriting, onboarding, transaction processing, everything is built behind mobile. So that's what helped us offer a differentiated experience. Small things like in-app redemption. Most of the time, people end up calling call center to get redemption vouchers for redeeming the rewards, which is one of the most organic feature of a credit card product. In our case, it's all there in app. You see it, you redeem it, you get the money instantly. Something like that.
But how are you going to convince people, Anurag, that they need another app on their phone, that they need another payment gateway, another app on their phone or their device?
So, the good news in energy, there is already a large set of population who is looking for a product like credit card. So, this category already exists. We're not creating the category. We are just basically bringing a superior product experience there in that category. If you look at current trends, either on search engines or as well as if you look at the volumes at main aggregators, one of the biggest traffic is happening on this product. And the reason is basically, in last 3-4 years, digital payments have become a mass product. They were a lead product before, probably done by few people in few cities, but now it's a mass product because the way every category is getting digitized, there is a very large merchant ecosystem is being created, and almost every product is targeting towards that. But very few of them is offering credit on the fly as a payment instrument, which is where I quoted the number. For almost 100 million Indians doing transaction online, only 30 million of them have credit cards. And credit cards essentially helps you do this experience as well as access credit, along with that. So this demand is already there. We're just placing a superior product experience to capture that. And that's what is evident. We launched a product where more than 80,000 people waiting for this product. They've already signed up for the waitlist.